Good afternoon, ladies and gentlemen, and welcome to our Green Fintech session. My name is Nomthandazo, and I am with the Communications Department here at the FSCA. This event could not have come at a more pivotal time as COP29 is currently underway, bringing global attention to the urgent need for sustainable solutions. Today, we gather to discuss the emerging trends, benefits, and challenges in green fintech, exploring how the sector is reshaping financial services while promoting a greener future. Now, in this session, we will be providing valuable insights into the role of technology in supporting sustainable finance and inspiring action. Now, we're just going to go over a few ground rules before we go into our presentation. The presentation will be taking place, and then only thereafter will we be taking any questions. Please remember to share your questions via our Q&A session and in the chat box. And then thereafter, we will be responding to all the questions posed. Now, what is the purpose of the Green Fintech session? The purpose is simple: knowledge sharing, stakeholder engagement, and to promote innovation. Now, please note that the examples and institutions referred to throughout this session are for illustrative purposes only. The FSCA does not endorse, promote, or recommend any specific company, product, or service. The information presented is intended solely to facilitate understanding of the green fintech landscape and its potential impact on the financial sector. Any reference to particular institutions or technologies are not an endorsement or a reflection of their compliance or suitability within the regulatory framework. And the views and opinions expressed during this session are those of the panelists and do not necessarily reflect the official stance of the FSCA. Now, first and foremost, I'm going to introduce our first speaker for the day, and his name is Keith Sabilika. Now, who is Keith Sabilika? Keith is a senior specialist in fintech. He's an experienced financial service professional with over a decade of expertise in the financial sector. He holds a Master of Commerce, which has equipped him with a deep theoretical and practical understanding of research and finance. In his current role as a senior specialist fintech at the Financial Sector Conduct Authority, Keith is mainly responsible for monitoring and assessing technological trends and innovations to understand their external impact on financial sector business models, product and solution design, and customer outcomes in order to inform agile and appropriate regulatory and supervisory responses to technological innovations. Keith, over to you.
Right. Nomthandazo, thank you so much for introducing myself and introducing the event. I must say I'm really looking forward to the presentation and the panel discussion that's to follow. I'm just going to jump straight into the presentation so that we do not waste much time. So I think, as you can see on my screen, the outline in terms of what I'm going to be presenting to you. I'm going to start off by sharing, the green fintech trends and introducing the subject of green fintech, mainly asking the question, why green fintech? And then look at some use cases that managed to gather from the desktop research that we conducted. And then I will then share, survey insights that we picked up when we conducted a market review in South Africa, just to understand the ecosystem. Then I'll close off my presentation by discussing some implications for the financial sector that I feel are quite important and something that we must just look out for as we are trying to understand this landscape. So without wasting much time, let me just jump straight into the introduction and the trends. I think we all agree that the globe is facing some serious environmental challenges, from rising global temperatures and more frequent and severe disasters, to dwindling natural resources. And we can't ignore that climate change currently stands as one of the most pressing issues, threatening not only the planet's delicate ecological balance, but also our way of lives is also affected by this. Now, the global climate crisis refers to the ongoing large-scale changes in the globe's climate system, which is primarily driven by human activities, such as burning fossil fuels, deforestation, and industrial processes. We can also see that we are seeing ever more frequent and extreme climate impacts, which illustrates how much is at stake. And as we also note the global average temperatures rapidly approaching 1.5 degrees above the pre-industrial levels. Now, the latest estimates put the world on course for a temperature rise of 2.6 to 3.1 degrees Celsius this century, unless we take urgent and ambitious mitigation to this crisis that's looming. Now, if you look at in many countries, the impact of climate changes, it's curving up to about 5% of their GDP, which speaks to how important this climate crisis is. So now, in response to this global climate crisis, what we have seen is that several jurisdictions, businesses, and individuals globally are uniting to promote environmental sustainability. Now, what they are doing is they are pursuing innovative strategies to mitigate environmental risk and to foster a more equitable and resilient future. Now, amid all these crises and the background that I've just mentioned, Green Fintech has emerged as a powerful force, it's a dynamic force at the intersection of technology and environmental sustainability. Now, it comes in to offer what I call it's a transformative path, leveraging technology to redirect capital towards renewable projects, conservative initiatives, and other sustainable business practices. I think the question then is, what is Green Fintech? So Green Fintech is a combination of fintech solutions and environmental sustainability goals. Now, the concept uses innovative financial technologies to manage environmental changes and to promote sustainable practices in the financial sector. Now, it includes the development of digital tools and platforms aimed at facilitating green investments, encourage transparency in environmental reporting, and supporting eco-friendly financial products and services. Now, this intersection has the potential, like I've mentioned, to play a transformative role in addressing climate change and environmental challenges. But then, what are the key technologies, since we are mentioning the intersection of technology and sustainability? So AI and machine learning, play a key role in terms of powering or driving fintech. What we have seen is that AI-driven tools support sustainable investing by analyzing data from risk assessment to green asset pricing. And then machine learning helps to automate carbon footprint calculations, to track environmental impacts and provide personalized, green investment recommendation for consumers who are interested in such products and services. We also noted that blockchain and DLT, or distributed ledger technology, enables transparency and trust in transaction, which is crucial for carbon trading, green claims handling, and verifiable supply chains. We also find that smart contracts, help to automate green finance processes like sustainable loans or claims from insurance that are based on environmental data. Then big data also comes in, or big data in analytics comes in as a key technology powering green fintech. Now, it helps process extensive environmental data and financial data to evaluate sustainability performances, quantify ESG metrics and forecast climate risk. Cloud computing also plays, a key role in the technology that's driving green fintech, helping to scale the data processing. Internet of Things is also another key technology that's helping to collect, real-time data and resource consumption, emissions and asset conditions, enabling, dynamic underwriting when you look at the insurance use cases that are in the green fintech space. Then the last technology that we also see is that geospatial technology, which offers, detailed insights into environmental factors like land use, natural resource, and pollution. Now, the information that we gather using this kind of technology supports risk assessment, sustainable asset management, and location-based environmental impact analysis, improving decisions in green finance, right? These are the key technologies that we find driving and powering green fintech. But then we also need to ask the question that what are the factors that are enabling green fintech? So technology itself plays a key role, like I've mentioned, blockchain, AI, machine learning, it's supporting or helping fintechs to create products that have got a green element to them. For example, when you look at banking as a service, it allows non-banking fintechs or entities to offer digital financial services like payments, loans, or savings account. Now, this reduces the need for physical infrastructure and paper-based processes and facilitates the development of financial products like green digital loans, green bonds, and the like. The other enabling factor that that's enabling green fintech is data availability and transparency. This is very much closely linked to technological innovation. But the availability of data and transparency, provides access to accurate and real-time environmental and financial data, which empowers fintechs to develop solutions for carbon tracking, automated offsets, and ESG reporting. It's important to also mention that regulation plays a key role in this space, policy and regulation support. Policy enables green fintech by providing a framework for sustainable finance. It offers incentives in some jurisdictions for green investments, ensuring transparency and accountability. And also for consumers, it helps to build trust and drives growth. Then the last enabling factor that we also picked up is that consumer demand for sustainable products. Rising consumer demand for sustainable product is fueling green fintech innovations, promoting financial institutions to provide these kind of services. So moving on to global trends, green fintech is experiencing significant growth and innovation globally. Now, financial institutions are increasingly offering green loans and green bonds to support, environmentally friendly projects. Now, these projects or these products offer, favorable terms to users to encourage businesses and individuals to invest in, renewable energy and sustainable finance. Now, the global market is expected to grow at a compound rate of 22.4% between 2024 and 2029. Now, this reflects the rising demand for such products, for sustainable financial products. Then in 2022, global investments in green initiative reached almost $500 billion. And most of these funding was facilitated by fintech companies and digital platforms, showing how much important or the kind of role that they are playing in this space. Then the rise of digital payment methods such as contactless payments is contributing to sustainability by reducing the reliance on cash and paper-based methods. What we can also see is that there is a surge or an increase in platforms facilitating investments in green projects and companies. And these platforms, they are playing an important role in terms of accessing funds and portfolios that are focusing on sustainable products. It's also important to mention that across the globe, governments and regulators, they are also playing an important role. They are implementing policies to promote sustainable finance. And initiatives like the Paris Climate Agreement, the COP29 that Nomthandazo mentioned as she was opening, they are also encouraging the development of green fintech solutions, providing a supportive framework for innovation in this space. Then looking at the classification, so there is no universally acceptable classification for green fintech market, but the Digital Finance Alliance and the Swiss Green Fintech Network have done a great job in trying to classify the landscape. They have classified the landscape into 8 categories, which speak closer to the current segmentation that we have in the fintech market. So the first classification is green digital payments and account solution. So these are digital platforms that use payment data to calculate automatically the carbon footprint of each purchase that users make. In this category, we also find things like mobile payments, digital payments, and wallets, instant payments, and electronic signatures. They all fall under this classification. Now, these innovations, they help reduce environmental impact by eliminating the use of physical resources like plastic and paper. The other classification that we have is digital investment solutions. So these platforms offer automated green financial planning and investment services with little to no human supervision. Then we have digital ESG data and analytical solutions. Now, these solutions, they offer automated green data collection and analytics for finance. Now, these digital ESG and analytic solutions, they deploy AI and machine learning to collect and analyze, unstructured data from various sources so that they can help in their decision making. So examples include, credit scoring algorithms that integrate digital or green digital data in their calculations, or automated ESG ratings for companies and funds. The other classification is digital crowdfunding and syndication platforms. Now, this is similar to the crowdfunding platforms that we are all familiar with. The only difference is that the focus is on green finance. Then we have green digital risk analysis and insurance. Now, these solutions, they also leverage AI and IoT data capabilities to facilitate climate, nature, and physical risk modeling. They focused climate and scenario projection, and in turn helps underwriters to understand and evaluate climate and the related risk and price these risks in their insurance models. Then we have got green digital deposit and loans. I think the name speaks for itself. Loans and deposits that are targeting, sustainable finance initiatives. We also have green digital asset solutions. So we have seen, I think, the rise in tokens and crypto assets and cryptocurrencies within green properties, utilizing blockchain and capital markets infrastructures. Now, for example, green utility tokens, they have been developed in this space. We also have seen tokens that use the proof of stake protocol. Now, according to Forbes, switching from proof of work to proof of stake has drastically reduced energy consumption for leading cryptocurrency platforms, making them environmentally friendly, investment options. Then the last classification is the RegTech and SupTech solution. Now, when technology is leveraged specifically for green prudential reporting, for automated assessment of financial products and services to green standards and green taxonomies. For example, what we have seen is that the Central Bank of Spain is leveraging natural language processing capabilities of AI to conduct their TCFD disclosures. Moving on to the survey or the market review that we conducted. Now, I think on the back of what I've just discussed, the global climate crisis, which is being fueled by, burning of fossil fuels, deforestation, causing disruptions such as the rise in temperature and shifting weather patterns, and then green fintech emerging as a transformative solution, helping to address this phenomenon of climate crisis. I think what we picked up is that there was a need to understand this landscape given its rise, and that the current state and potential in South Africa, it's still unclear. So what we intended to achieve by this market review was to explore South Africa's green fintech landscape, focusing on the associated consumer risks, benefits, drivers, and the implications for the financial sector. The methodology we used was a mixed method, where we collected the data from surveys, we did desktop research, and we also conducted in-depth interviews with the selected participants. Now, let's just move on to the survey insights. Looking at the duration of green fintech initiatives, most institutions have been active in green fintech for varying lengths. That's what we picked up, with notable clusters in 1 to 3 years and less than 1 year. Now, the majority of institutions anticipate, so these institutions that do not currently have green fintech initiatives within their product solutions anticipate to have these within the next 3 years, reflecting that it's in their short term to meet them plan. But these findings suggest that while green fintech is a relatively new field, a subset of institutions is experienced in committing to long-term goals, as some institutions have been providing these solutions for more than 6 years. Now, looking at environmental impact, now these green fintech initiatives, the impact that they brought to the environment, they ranged from low impact to high impact, indicating, mixed outcomes. Now, this could imply varied success levels, which is a factor of a number, which is dependent on, the initiative itself, what it's focusing on, and the strategies that these institutions will be implementing. Looking at the next set of findings, now the primary focus of the Green Fintech initiatives appear to be carbon footprint reduction, indicating an alignment with global trends. We also picked up that renewable energy financing and climate risk assessment are also, notable focus areas. I think what was important to note was that institutions often selected multiple focus areas, suggesting that in their approach, they are not only targeting one focus area, but multiple, focus areas. Then the scope of the Green Fintech initiatives Now, a substantial portion of initiatives targets international markets, although there is significant activity in the national, at national level. Now, indicating the strong interest in addressing global environmental challenges at an international level, whilst also catering for our South African needs. Now, looking at the dominant segments within Green Fintech. Now, digital ESG analytics and green digital payments had the highest response values. We also saw that green deposits and lending and crowdfunding solutions, though less emphasized, they hold potential to support renewable energy and other environmentally beneficial initiatives. I think it's also important to note that green RegTech and SupTech solutions, even though they didn't come up as dominant segments, they hold the potential to help with green compliance and supervision of these initiatives. When we ask the question around technology supporting green fintech initiatives, now big data, AI, machine learning, and cloud computing were the dominant technologies. Now, the prevalence of AI and machine learning indicates a focus on sophisticated data analysis for environmental impact assessments and predictive modeling, while big data and cloud computing suggest that scalable data and data intensive approaches are key to these initiatives. When we looked at the prevalent risks, greenwashing was the most prevalent risk, suggesting that some institutions are exaggerating their environmental impact. Now, this speaks to the need for a clearer regulatory definition or taxonomies and standards to differentiate between genuine efforts. Regulatory uncertainty also came in at moderately prevalent, highlighting the inconsistencies that we can pick up from regulation. These uncertainties may pose challenges for green fintechs, which may struggle with the evolving regulation, unclear definitions, and the lack of standards which are specific to sustainable finance and then data privacy and cybersecurity also they rated highly prevalent, as many initiatives rely on technology and data. Now, this prevalence underscores the importance of robust data protection policies and regular risk assessment to protect consumers and ensure ethical use of the data that's powering green fintech. The other risk that also came about was inconsistent metrics, which was moderately prevalent, posing significant challenges to the ecosystem, as it makes it difficult to compare various initiatives in terms of what they have achieved. Moving on to the benefits, carbon reduction was the most emphasized benefit. This was then which had the same score as driving innovation. And then the other benefit that we also picked up was enhanced transparency and improve access to finance for green projects, which emphasizes the role of green fintech in improving transparency and advancing sustainable finance. When we asked the question around the key drivers of green fintech, regulatory policy and incentives, they rated significant, aligning with the need for regulatory clarity and the role that it plays in the adoption and success of green fintech, while incentives such as tax breaks and subsidies, further would stimulate investments in the sector. Then market demand for sustainable solutions rated moderately significant, indicating how positive the market plays in terms of the adoption and the growth of green fintech. Now, technological advancement rated moderately significant, suggesting that technology alone may not drive adoption without other factors or without the other driving factors that I've just mentioned, like your regulatory policy and also investments. Consumer awareness rated significant, suggesting it is an essential driver for success and adoption of green fintech. Now, challenges hindering growth of green fintech. Regulatory uncertainty came up as one of the challenges that it's hindering the growth. Then limited market awareness, as some consumers are still unaware of the fintech solutions. The other one that we also picked up as a challenge was the lack of skill and talent. This sector relies on specialized skills in areas like AI, big data, and the lack of expertise in these areas, they may hinder the ability of companies to innovate and scale effectively. The other hindering or other challenge was that high technological costs. Advances in technology like AI and ESG analytics, they are costly to develop and to maintain, which poses as a barrier, especially for startups. And also to add to that, the rapid tech evolutions that come up with these technologies, they may add a strain to institutions. Some of the other interesting insights that we also picked up were that the green fintech market is perceived to have significant potential, with estimates spanning more than 10 billion rand, suggesting substantial growth and optimism in the environment and financial return. And then when you ask the question around the growth perception, in the past 5 years, green fintech is perceived to have grown moderately, reflecting a steady rise in green fintech adoption, while in the next 5 years, there is more optimism for significant growth. The question on risk mitigation was to try and understand how the industry players are mitigating the risk that they encounter. And the response we got was that there was a strong emphasis on robust governance structures or transparent reporting using live data, impact models, and also active stakeholder engagements to ensure that products are relevant and ethically sound to the consumers that they are targeting. Lack of standard metrics also came up as one of the findings from the survey, as we identified that there isn't a standardized way to assess environmental outcomes. Now, this makes it difficult to compare and measure the impacts across green fintech initiatives. We then asked the question around regulatory framework priority areas. And what stood out was that there is need for regulation that facilitates innovation and also clear standards and guidelines, for best practices in green fintech. Now, having discussed all these insights from the study, then the question is, what are some of the implications for the financial sector? I think it goes without saying that one of the implications from this is that there is need to promote enabling policies and regulation, the regulation that doesn't stifle innovation in this space. Establish clear regulatory guidance and taxonomies, to reduce the uncertainty and empower innovation without fintechs fearing regulatory repercussions. I think also as we wait for clear regulation, and as we promote that regulation, it's also important to also make use of things like your sandbox, to test some of these solutions, as these sandboxes in a way they help to solve some of the regulatory uncertainty that we may find, and also might also help in driving the pace at which new regulation or amendments come in. Driving awareness, I think it's also another implication that we need to, drive more awareness campaigns on green fintech solutions, as this has significant impact, which affect the growth and adoption of green fintech. I think given the global climate crisis and the growth potential that we picked up, now there is a unique opportunity for the financial sector to lead in both sustainability and innovation. By proactively embracing green fintech solution, the sector can drive, environmental progress while, advancing, cutting edge financial technologies and innovations. Data privacy and cybersecurity goes without saying that there is use of technology and data, and robust mechanisms need to be adhered to and implemented so that there is protection when it comes to that. Then the last implication is that further work is still required in this space. It's still a new area, and various stakeholders from authorities and industry players, they need to do more work to help understand and explore how this sector can proactively assess and respond to the emerging risks and also the opportunities that it's presenting. In closing, I think I would say I hope this survey has helped to share some insights and some new information. And I hope you find that this information is quite insightful, and will help drive dialogue in this space as we all continue to fight the impact of climate change and create a sustainable future. Thank you so much for listening in and for your time. I'm going to hand over back to Nomthandazo. Thank you.
Thank you so much, Keith. Ladies and gentlemen, we did mention at the beginning of the session for you to feel free to pose any questions that you would like to ask based off of the presentation. There is a Q&A tab there for you to be able to use it. Please feel free to use it. In the meantime, in the absence of any questions at the moment, we will then move on to our next session, which is our panel discussion. And I'm going to be introducing our panel. The first panelist is Grant Field, the Fedgroup CEO. Now, Grant has been the CEO of Fedgroup since 2015, having joined in the year 2002 to help set up the IT department. His unique expertise led to his promotion to COO and then later CEO. He was instrumental in designing and implementing a custom IT system to streamline Fedgroup operations. His leadership draws an experience in financial services, supported by BSc in engineering, an MBA, and entrepreneurial IT work. As CEO, Grant prioritizes client well-being over profits, blending a people-first approach with advanced technologies like AI, IoT, and peer-to-peer models. He drives innovation and is passionate about delivering client-focused, technology-driven solutions. We then have our next panelist. We then have Belinda. We have Belinda Carreira. CASA, founder and CEO of SustainableDNA. Belinda is a seasoned executive with 3 decades of experience in audit, finance, banking, strategy consulting, and ESG sustainability. Specialist in developing sustainability strategies for global clients across all sectors. Belinda founded Sustainable SA in 2019, which is a project now sponsored by the South African Institute of Chartered Accountants that provides regular updates on South Africa's status for achieving each SDG, education, highlights of key actions needed to be taken, and relevant tips and tools for reporting. Welcome, Belinda. We then have Kershia Singh. Kershia is the Departmental Head for Policy Support. She is currently the head of the Policy Support Department at the Financial Sector Conduct Authority within the Regulatory Policy Division. Her portfolio involves, amongst others, driving the FSCA's objectives of supporting financial inclusion and transformation of the South African financial sector and the development of the FSCA's approach to sustainable finance. In addition to policy development, the department is also responsible for deepening the FSCA's customer and market insights to better inform regulatory and supervisory policy and approaches. She holds an honors degree in development science, development studies from Wits University, and a master's in finance and financial law from the University of London. Welcome, Kershia.
We might have lost Nomthandazo. All right.
I've just brought you onto screen.
All right. And Awelani.
My apologies. We had a few glitches with technology. It is not our friend, really. As I was saying, we have Mr. Rahulani, FSCA Departmental Head for Fintech. He is an experienced financial services professional with an extensive track record, 17 plus years leading projects, research, analysis, and crafting policy in the financial sector. His academic qualifications entail Master of Commerce in Economics and Master of Business Administration. Welcome, Awelani. Keith, over to you.
Nonki, thank you so much for the introductions and welcome to our panel. And I must say, I'm really looking forward to the discussion that we're going to have on this topic of Green Fintech. I think I'm just going to start with you, Grant, and I think I'm just going to combine 2 questions in one, just for you to maybe speak a little bit more about, introduce your organization, and then on the back of that, based on your extensive experience that you have seen in this sector, if you maybe share some of the innovations that you have seen, or locally or internationally in this space, and some success stories that they have brought to businesses, to consumers, and to the environment at large. I know it's a lot in the first question, but I'm hoping that we can learn some great insights from your perspective. Thank you.
Yeah, sure, Keith. Thank you very much, and thanks for having me on this forum. I think my background is, I'm, as you said, the CEO of Fedgroup, and Fedgroup is a financial services company with everything from life licenses to sort of pension funds, trusts, wills, estates, the broad spectrum of capabilities in terms of licenses and the systems to run them. But where we are a bit different is that we've really tried to take a very forward-looking view in terms of where we believe the world is going, and we always try and do that. So, we are one of the respondents who have been playing in some of these spaces for certainly almost close to a decade, and we've got a strong understanding of technology. So many of the buzzwords, AI or machine learning, IoT, peer-to-peer, these buzzwords that one hears. along with trying to take a very forward-looking view on where we believe the landscape is moving more generally. So, whether it be political, whether it be environmental, etc. And we try and find where those technologies and social trends converge, like you were speaking, and then we try and design products that take into account these sort of changes. But maybe before jumping too deeply into the technology, I think I wanted to almost remind ourselves, I mean, because the technology that's the big buzzword has to be AI at the moment. I mean, that is really the thing that's making the biggest change in our lives right now. And many of the technologies that we've been looking at this morning are not that new. Many of them are a decade old already, but they're becoming more integrated into our daily lives. But really, in order to really look at this topic more clearly, I think one has to remember that there are people that ultimately are needing a solution to real world needs. And that's quite important. Often we get so caught up in the technology and the green fintech and all these different things, and we forget that there is a real world, and people are wanting to invest their money, or they're wanting to borrow money, or they wanting to make sure that they've got some sort of insurance in place, etc. And then if we're to focus on, in my view, what is the single biggest thing that one could do to make something green, to make something not a waste, and that is not to waste. And I know that sounds obvious, but the biggest way to make something not green is to waste. So if you look at something like food, 30% of all food produced is literally wasted. It never gets consumed at all. And you look at how often we're trying to find this small little efficiency. How do you reduce your fee by 0.2%, or how do you unlock this certain gain, whatever it is? And many of the real world economic activity is just filled with waste everywhere. And so a large part of what we try to do is to take that bottom-up approach. We try to understand the real world problems, and we try to reduce waste. We try to improve efficiency. And so a couple of real world examples. I mean, I think in our own world, we've built that sort of product around the impact farming space. And it really tries to find that efficiency everywhere. So whether it be that someone can come and use an app, and that buying process is as efficient as possible. It covers everything from training to the actual purchasing to your reporting. Again, just efficiency. But behind the scenes, there's a lot more going on. Every single time that capital is deployed into some sort of a farming initiative, we've got IoT, or Internet of Things devices, that literally give us real-time monitoring of, for example, environmental conditions. We know, are there enough cold units, or are there too many cold units? Is there enough water? Is the pH right? What are the soil conditions? And you're not reporting on it afterwards. You're making sure that you've got this sort of real-time reporting so that you can make data-driven decisions. Some specific, and then of course you wrap it all in AI, and AI can then allow you to analyze huge amounts of data and make informed decisions on it. So looking at a very specific example, we've got a farm that we've ultimately got money or capital deployed in, and there are devices that go around certain of the trees that no longer look at how much water, you can measure through a water meter how much water you are putting into the ground. But more important is how much water is the tree actually drinking. So, that's how modern these things are now. So we've got devices that can actually tell how much water a tree is drinking. And we can compare that to how much water you're delivering. And already we're able to see huge differences depending on where the trees are planted, what the soil conditions are. So you can literally change your water schedules to line up with that. Energy, literally making sure you've got green and energy as possible. But perhaps less obvious is things like bees. We are able to tell the health of a beehive using IoT and machine learning. And of course, a healthy beehive then ensures that you've got crops that are that much more efficient, that you just produce much better crops. We literally can tell that a beehive is declining in health, or as so often happens with pollination services, it's a pretend beehive where it's arrived there and it's got some bees flying there, but it's mostly filled with honey and not real bee colonies. So I think that, that gives you a flavor of the type of thing that we try and do, is we try and leverage multiple technologies, but try and really look at real world solutions and find the convergence of these and build things that reduce waste and unlock value.
Grant, thank you so much for those comments and those remarks. I think with the similar question, I'm going to move on to Belinda to also just share, where your experience in this sector and what you have seen and where your organization and how you're trying to assist in this, crisis of climate change. Thank you.
Thanks, Keith, and very, very interesting, Grant, the examples that you gave. So yes, I'm the CEO of SustainableDNA, and our business has two parts. The one part is we do sustainability and climate change advisory. And then the other part is we offer software solutions to help companies implement on that advisory work. So our software solutions that we offer are around about, really tracking the reporting and the metrics and making sure that those metrics are calculated according to standards and that they're consistently reported on year. So that's just a very high-level overview of what we do. Now, when I look at, and we've worked around the world with clients, I spent a while studying through MIT as well on sustainability and strategies around sustainability and life cycle assessments. And there I got to connect with global organizations and people who work in those companies, and got to work with a couple of companies in Europe, and particularly in Switzerland and also in Belgium. And what we have seen, and also in the US and in the UAE, and of course we work in South Africa and across the African continent. But the major trends that I've seen in the work that I've been doing, they fall into 4 categories. And Keith, I think this speaks to your presentation earlier. And, I was quite interested to see how aligned it actually was, in that these 4 categories are around, firstly, Green Fintech has been used to help with climate change and managing climate change. And as you mentioned, that there's a huge crisis around climate change, and I'll explain some examples around how it's been used in that area. Then we're seeing sustainable products that are being developed using Green Fintech solutions. We are also seeing Green Fintech being used to help companies develop their net zero transition pathways. And then lastly, but certainly not least, it's around sustainability reporting and disclosures that we're seeing Green Fintech being used. So those are the 4 main trends that we are seeing. Now, back to basics, and I think, Grant, it was lovely the examples that you gave, because we've got to look at real world examples, and everyone wants to be at a certain point, but we've got to get back to basics. And basics says that we need to gather the basic data. And, when a client comes to us and asks us to give them a climate strategy, I can't do that strategy without calculating the scope 1, 2, and 3 emissions, because we really need to understand what the emission sources are. We need to understand the boundary and what the material emission sources are in each of those categories. So we're seeing Green Fintech being deployed more and more around these calculations, and these calculations are now becoming automated, which is so much better. And a set of rules has been used, that applies the GHG protocol accounting standards. So this allows us to consistently calculate these emissions, to benchmark them, and to register them with organizations such as the SBTi. So we can measure like for like across organizations. Of course, we are still a long way off from all organizations doing that consistently, but I think everyone's made commitments, especially in terms of the Paris Agreement and nationally determined contributions, that they want to reduce their carbon footprints. So that's one of the major areas that's been used. And I think what we've also spoken about and alluded to is, we need to do scenario modeling. So we need to model the different temperature degrees through, the impact it's going to have on organizations, how organizations are going to play into that, what are the risks, what is the exposures, and this links into the insurance that they need to take out in terms of if there's severe droughts or, extreme weather conditions, what are the insurance contracts these companies need to take out. And then also something that's not vastly understood, but we are seeing this in more mature companies, is they're linking life cycle assessments of the products into the carbon calculations. The life cycle assessment looks from cradle to grave of the product, and it's looking at the carbon footprint all across the life cycle assessment. Sometimes companies only look at one part of the equation, but you have to look at the whole thing. And this is where sort of technology and green fintech becomes imperative, because it's very hard to do all of this data modeling on an Excel spreadsheet. So you need to integrate this into a green fintech system that gives you the entire view of the carbon footprint of the product from cradle to grave. And it helps you decide, if you're going to manufacture something, which is the best way to manufacture your product, which are the best inputs to use, what's going to have the least carbon footprint, water footprint, and environmental impacts. And we're also seeing social impacts being factored into that as well. That's one of the areas I think is really important. And of course, when it comes to modeling climate risk and embedding sort of impacts of weather patterns and extreme weather risks into that, we're seeing, satellite imagery and satellite data being combined into these climate models to help with climate risk modeling. Then under sustainable products, we work with a number of banks, both in South Africa and across the African continent. And it's something that banks are very, very keen to develop more of, is these sustainable products. So I'm not going to go into all of these products. Keith, you mentioned a number of them, green deposits, lending, crowdfunding, a lot of them up front. But I want to mention two of the major ones that we are seeing, which of course is the green bonds. And then of course, when it comes to banks, they're more and more aware of social development linked bonds and loans, and how the social development stuff links into the green fintech and the green bonds is that, for example, in South Africa, we're working on a just energy transition. So banks want to link in those social aspects into the renewable energy financing to make sure that the social impacts are taken into consideration. And this is becoming more and more important, is that when we look at green bonds, we tend to only think about renewable energy and the environment, but we have to link the social elements into that. And we're seeing more and more of that coming up. A notable success story here is, the World Bank. They have issued blockchain-backed green bonds. And this, enables investors to track the investment at every step of the project life cycle. And it helps investors to ensure that the funds that they have invested are being used actually for green projects. So that's a really good use of green bonds linked with blockchain. For net zero, it helps with modeling the net zero transition pathways. So we know the SBTi and the Paris Agreement says, we need to achieve by 2040 at least a 45% reduction in emissions and net zero by 2050. So there's different initiatives companies can take in order to achieve, a reduction in carbon. So helping to model those different initiatives through the pathways, that's where green tech proves to be invaluable. And then also carbon offsets. So those have, they've got massive financial implications because you actually have to pay for carbon offsets. So if you can reduce your emissions and invest in green tech and, business process reengineering and do that, informed by data and analytics, you're going to be far better off than if you're just kind of trying to replace something here and there, and it actually ends up costing you more in the long run. So greater cost savings in those net zero transition pathways. And then finally, but not least, is definitely around the reporting and disclosures. So I'm sure the International Financial Reporting Standards issued S1 and S2, which is the Sustainability and Climate Change Reporting Standards that have come out. And it's helping companies to report on that, which is reporting on sustainability and climate change, the metrics consistently year on year. So it's not only a bunch of words, but you're also bringing the metrics in there. And of course, the JSE Sustainability and Climate Change Disclosure Guidelines, they've got 88 metrics that they want companies to report on that. Green Fintech is proving, absolutely invaluable in doing that. And then, of course, when we look at Europe, we've got the FRAG standards issued by the CSRD, which is those sustainability and climate change reporting standards that apply to Europe. So all of these things are, can't really be done without using technology. And that's where we're seeing the trend in green fintech play out, especially, with our clients, both locally and internationally. Thank you.
Belinda, thank you so much. That was, interesting perspective. And I think I like your perspective that it's locally and internationally, and it's great insights, which from my end, I'm also, taking notes and learning from. I think before I move on to Kershia, I'm going to ask Awelani, you have a different viewpoint because you are fintech and regulation at the same time. So I'm also interested to learn from you, some of the key benefits that Green Fintech, is putting on the table, and the role that regulators have to play in order to support the growth in this sector. Over to you, Awelani.
Thank you very much.
Awelani, we are not hearing you. Your sound is not that great. No, you sounding faint. Let me try again. All right, Awelani, let me do this. Let me just pause a minute and hand over to Kershia so that she can respond whilst you try to sort out your network. But Kershia, let me just check with you. I know FSCA published a sustainable finance consumer report and a roadmap recently this year. I've read the document, the great information and insights, and it's also important. It's quite interesting to note that FSCA has got a stake in the sustainable finance. But I just want to learn from you and also the audience to learn some of the key areas that are contained in that report and what it seeks to address. Thank you.
Thanks very much, Keith, and good afternoon to my fellow panelists and those joining us in the audience. I think, I was a little bit worried coming onto this panel and wondering if I knew enough on green fintech to usefully participate. But a lot of what Belinda and Grant have been speaking about, and even your presentation, Keith, really is familiar to me as somebody who is looking into sustainable finance and considering the regulatory role in relation to it. And it's really encouraging to see the fintech sector developing solutions for how to address these key challenges that we're facing in relation to sustainability and climate challenges. Our sustainability consumer risk report and roadmap had two distinct parts. The first part looked at the risks that are posed by sustainable finance to consumers, and the second looked at some of the work that the FSCA is doing in relation to sustainable finance. But I just want to maybe take a step back and, contextualize sustainable finance in terms of what it is we're discussing now. I think we've spoken a lot about key challenges that companies are facing. Our concern as a regulator is how do we ensure that the flow of capital is going towards projects that support sustainability outcomes? So how do we ensure in the traditional financial market where capital flows from savers and investors to borrowers and end users, that sustainability considerations are kept in mind and that key market objectives are still met: customer and investor protection, stability of the market, and the integrity and efficiency of our market. And that really is what our key consideration is when it comes to sustainable finance, making sure that that flow of capital is as supported as possible so that capital moves to where it's needed to address sustainability challenges. Our consumer risk report was really insightful. I think it raised that there are risks that come up in sustainable finance, but as a market conduct regulator, these are actually not risks that are new to us. They apply to traditional products as well. And these are risks when it comes to the product design and quality of products that are being marketed as green or sustainable, the risk of inadequate or misleading information, the risk of misconduct. We also have a challenge of relatively low levels of understanding and awareness amongst consumers of what can be a really complicated topic. And then consumer biases, where you may select a product based on certain characteristics that you think you understand, and it actually doesn't meet the needs that you're looking for that product to meet. And then there's this more specific risk when it comes to sustainability products of greenwashing. We also come across terms like social washing and impact washing. And a lot of this boils down to the quality of information in the market. Is the information that is available credible, consistent, and decision useful? And I think there's a number of stakeholders that have a role to play in supporting that end goal. We are looking at the role we can play in terms of disclosure and reporting from financial institutions, and disclosure and reporting from financial institutions to the market in general, and disclosure in relation to customers and investors specifically. And that's the second part of our roadmap, and it looks at some of the work we're doing in relation to that. I think the work that Belinda was mentioning about technologies and tools that will enable easier reporting is absolutely necessary. But I think there's also quite a strong need for clear guidance on which frameworks we're going to align to. And I think, Belinda, there's been quite a clear signal from stakeholders in South Africa that we will also try to be aligning to ISSB, IFRS S1 and S2. So Keith, yes, I'll stop there. There's a lot that I could talk about, but I'm very interested in the conversations and considering the sustainability from a solutions perspective, and in terms of some of the solutions that are available to the market leveraging technologies. Thank you.
All right, Kershia, thank you so much for sharing your perspective from that angle. I'm just gonna go back to Awelani and check if you can hear me and I can hear you. Awelani, over to you.
I can hear you, Keith. Am I audible now?
Yes, you are audible, Awelani.
Thank you very much.
Yeah, I don't know. I can just rephrase the question that I'd posed to you, and I'd say your perspective is quite different. You are fintech and regulation. I'm quite interested to learn from you, the benefits and the role that, regulators can play in supporting this industry. Thank you.
Most definite, Keith. No, thank you. Thank you very much for that question. I think without repeating what you have said and other speakers have said, I'll just want to highlight two key benefits that we have actually identified as we engage with the ecosystem and continuously monitoring the ecosystem. I think one clear benefit is the one of economic growth. What we are seeing is that this green fintechs, it's not only about sustainability, but we are also seeing that it's also a catalyst for growth, because from these green fintechs, we are seeing emergence of new markets and product and solution and services, which in return, they end up driving economic growth. And what we are also seeing is that investors, for example, they are no longer just looking for a way to make a return. They are also looking for solutions that are environmental friendly, that are also sustainable. Similarly with consumers, they are not just looking for products that meet their day-to-day needs or their personal needs. They are also looking for products that are sort of environmental friendly. So what we are seeing is that, yeah, this green fintech is going to play, and it's already playing a huge role in economic growth. I think your presentation clearly demonstrated in terms of statistics as to what are the projections as to what this sector will look like or will contribute in the global economy in the future. So that's one aspect that I want to highlight. The other aspect is around innovation and competitiveness. we have seen that. I think Grant is a classic example of that, with the solutions that he was actually highlighting. It actually support the point that I'm highlighting. Organizations or institutions that are embracing the need to support or to come up with product and solutions that are environmental friendly, they are very innovative and they are very competitive. I think that's the evidence that we are seeing in the market at the moment. And also to highlight that Green Fintech is also being seen as the future driver of a fintech wave. Because remember, the first wave of a fintech was mostly when your traditional financial services and products were just being digitized, like digital payments, digital loans. And then we moved to the second wave, which was a wave whereby these fintechs were leveraging data to come up with new product and services. Now we're going to have a new wave whereby these fintechs, over and above the financial product and services they are offering, they will also be looking for ways to support a sustainable environment. So those are some of the benefits that we are seeing going forward as far as, and also currently witnessing as far as Green Fintech is concerned. What are we doing as regulators? I think, as you may know, from a regulator perspective, we've got a regulatory sandbox that we co-own with some IFWG members. I think what the sandbox does, it provides that space where some of the solutions can be tested, and as regulators will be able to understand those solutions in a more deeper level and clearly understand some of the risks and the benefits and be able to respond appropriately in terms of our policies and regulations so that we are able to balance innovations and regulation in our environment. So that's the points that I just wanted to highlight, Keith. Thanks.
No, Awelani, thank you so much for sharing those insights and also the perspective that, it's driving economic growth. It's not just solving the problem, but, there is more to it that as an economy we can benefit from. I'm just going to, get the discussion going. I think I'm going to go back to Kershia again. Kershia, in your first remarks or first comments, you mentioned about the primary risks that sustainable that come up with that we find in sustainable finance or in sustainability. I just wanted you to get back to those consumer risks and also talk to how consumer protection tools can be utilized to mitigate these risks that we see emanating from this space. Thank you.
Thanks very much. So there's a lot that we could speak about when it comes to consumer risks. I touched a little bit about, the levels of literacy and understanding amongst consumers when it comes to sustainable products and services. But again, I think there's a really big emphasis on making sure that there is accurate and not misleading information that is provided to consumers. And this is not as straightforward as it may seem in the sustainability or green space. I think there may be quite a strong risk that companies highlight the good and just don't talk about the bad. And I think, that's part of the focus in South Africa of emphasizing a just transition. So not just focusing on environmental credentials to the detriment of other social impacts that could be possible. So I think that's one of the key risks that consumers face. But it goes back to the quality of and availability of information in the market. So we've seen in some jurisdictions, Australia is a good example, where a company actually self-reported greenwashing. It was an investment company. They'd marketed a product as green or sustainable, I can't remember what. And on further investigation, they found that there were actually links to a fossil fuel company somewhere down the investment chain. And I think, this just goes to show that even with the best intentions, if the information available in your market is not credible, it could result in very unintentional misleading information being provided. In terms of consumer protection tools and responses, one thing we recognize is that some of our market conduct tools are already sufficiently wide enough to cover sustainability considerations. So we have requirements, for example, that require when you're providing information to a client, it must be factually correct, it must be provided in plain language, it must not be misleading, it must be adequate and appropriate to the circumstances of the particular financial service. These were not necessarily with sustainability objectives in mind, but they absolutely apply to sustainable products and services, and we'd urge providers to keep those types of requirements in mind. Having said that, we will also explore where we may need to bring in additional requirements, for example, potentially a stricter definition on what constitutes greenwashing in the South African context or things of that nature. But it will have to be something that's considered in a building blocks approach. We can't be placing very onerous requirements when we're aware that the market is not necessarily as mature as it could be. At the same time, wanting to make sure that consumers do remain protected as the market grows. Thanks, Keith.
Right, Kershia, thank you so much for that. Before I move on to Belinda, I think I want to ask Grant, I think from your perspective as well, it goes without saying that you have encountered some risks and some challenges, as you're developing these solutions. If you maybe share those risks and challenges and the kind of strategies that you have sort of like implemented to mitigate, these challenges and risks that you might have faced.
Now, Keith, I think one of the biggest risks and challenges is that the regulated are held to one account and the unregulated bypass all the rules. And I think this is especially challenging in that it's, we're now in a global economy where I can log into a tool or download an app or click a website that could be coming from anywhere in the world, that could be claiming all sorts of unrealistic and untrue information, and then people are comparing us in a regulated space to this space. I think that's one of the most difficult things is, whether it be online fraud, whether it be, just that there's this entire ecosystem that is unregulated, that goes across borders, that is in every single consumer's hands, and is not in our control or in anyone's control. And certainly we've had people pretending to be us and people pretending to sell our products, and and it's not us, it's not our website, we've got no links to this, and we obviously have to try and take steps to try and close these clones down. So I think that one of the biggest efforts that perhaps the regulator with the industry could try and do is to work out how does one practically create this somewhat closed ecosystem in terms of some of the safety and security. How do we not just come up with policy that says you're not allowed to speak to a client in a certain way, but how do we collectively find practical ways in which people know your bank details in a very safe manner? People, just really trying to find practical solutions. I think, again, the approach that we take with regards to trying to build things that are green is always to look at that efficiency again. And so, again, just some examples of inefficiency are, a car idling in traffic, an empty building with lights and electricity on, or food waste. And in the same way, in the financial services space, examples are multiple intermediaries, each adding a layer of costs to transactions, or manual verification processes that really do need to be automated, but systems that don't talk to each other, compliance requirements that often create more paperwork than protection. And if one looks at those as problems that create inefficiency, how do we work together, industry and regulators, to create this more efficient ecosystem? For instance, could we streamline KYC processes while maintaining security? Could we share verified data more effectively to reduce redundant checks? The goal is not to bypass controls, but to try and make them more efficient. And I think in our own ecosystem, we try to drink our own Kool-Aid. Practically, we try to build this data-driven approach to all our decision making, and we try to eliminate waste everywhere. We have all major metrics in our business with a 15-minute accuracy. So that's the way we run our organization. We know every debit, every credit, every email that comes in, we just within 15 minutes. And we've tried to gamify our entire data-driven approach so that we can simplify the feedback loop in an effort that everyone knows what they can do. So you can see we take a very bottom-up approach, but we can only control what we can control. And I think, as I said, the biggest risk is the stuff outside of our control, when someone is pretending to sell a product, or that a product does certain things and they are not even regulated. They may not even be from this country. And that's something that collectively we have to try and see, how do we try and stem that out?
Right. Grant, thank you so much for that perspective. I'm happy to say that we have regulators in the room, and I'm sure they're taking notes. And also the other item that came out from your perspective is collaboration, working together. I think it's also an important item that regulators should also make notes on that and see how we can work together so that we can sort of like try to mitigate these risks that sort of like picked up. Just moving on to Belinda. Belinda, I also want to hear from your perspective, some areas of considerations that fintechs or institutions trying to venture into this space should focus on so that they become successful and navigate some of these challenges that we might have spoken about, or some other new challenges that we have also picked up from working in this space.
Thanks so much for the question, Keith. And I think it's been an absolutely fantastic and invaluable panel. A lot of what I was going to say has already been said by Kershia and Grant. What I have seen a lot of is the greenwashing when it comes to stating how the product is environmentally friendly. And when that gets tested, and when you're looking for the data around that, it actually isn't there to support these claims that are made around this product. So I think, regulation around what people say, is environmentally friendly about their products is going to be fundamental and key going forward. And here's where the standards will also come into play. It's very nice that we've got this IFRS S1 and S2 that we can now start to look at following. And what we used to call this huge alphabet soup of regulations and frameworks around sustainability and ESG is now somewhat being consolidated. So it's becoming more streamlined, and that's helping us with reporting, and it's helping us determine what metrics we actually are reporting on. And one of the key points that Kershia raised, which is also something that I would like to emphasize and raise again, is on the reliability and the consistency of the data that's been reported on. So what we used to see in the past was that people could choose what they wanted to report on. So it was always good news. So every year when the metric wasn't good, or when the story wasn't good, that would just get dropped out of the reports, and that would get dropped out of the data sets. And, they'd keep that information to themselves. If their water usage went up, or if their carbon emissions went up, they would focus on a different category of carbon emissions, a tiny little one that went down. Or they would speak about different aspects of water, not potable water consumption, but some other aspect of water, like leak detection. We increased our leak detection. And that's not really the point of what this reporting needs to be about. It needs to be a balanced view. So you can't only be reporting to all stakeholders and to consumers the good metrics. You need to report the good with the bad, because that is how life is, and that is how the world is that You're not going to always have everything good 100% throughout the year, but hopefully, you make up for the bad, or you make plans around it. And I think that that's really, really key and important, is reporting honestly a balanced view and consistently reporting that year on year, and having a set of rules that you apply to the reporting so that you can apply benchmarking across the same industry, across companies, so that you can actually determine which company is actually doing better or worse than another company. A whole lot of reporting that's wonderful reporting does not mean that that company is actually actioning sustainability completely throughout the organization and actually changing the way that they do things. I think I'm very pleased to hear that there's a lot of regulators in the room, and I'm very honored and privileged to be here with the FSCA today, because I think that the organization can play a massive part when it comes to helping to regulate what gets put out there and how it gets put out there. And I think that's one of the things that's going to really help to move this forward and make sure that companies do walk their talk and they don't go about greenwashing and overstating claims. A couple of things that I would like to add to this conversation, and which actually has been mentioned before, is cybersecurity. So we can't overstate how important cybersecurity is, and having those security audits of the financial information and the environmental information that's been reported on. Here we've got distributed ledgers coming into place, and we've also got smart contracts. And so making sure that systems work accurately around those smart contracts, that the distributed ledger information is kept, secure and safe, and there's certain access controls is imperative. Then lastly, what I want to add here is that when you're looking at a fintech company that wants to establish and build new sustainable and green products, it's imperative to get people with strong sustainability and environmental skill sets into the team. So, as much as you can sort of say, oh, okay, I'm going to learn about this as we go along, it's really good to build up a team with expertise within that area that can help to, build that product set. And they can, scientists and people who've been doing these calculations for a while, and you're very well versed in the subject, that would enhance the product development, and it would actually enhance what the fintech company is putting out in terms of green fintech. So I think, and there is a bit of a lack of skills in this area, but it's building up those skills in-house and making sure that you've got the skills, because some of it is just a knowledge gap. People sometimes make claims and they don't realize that the claim that they're making is fictitious. It's not, based on true data, and it's not really relevant. So I think building up the right skills, cybersecurity, and then just to reiterate, getting the regulation more streamlined around these products, and sort of stamping out this greenwashing claims around the products. Those would be key things I see as being imperative to driving green fintech forward and making it reliable and credible.
All right. Belinda, thank you so much for those insights. You mentioned distributed ledger. You also, I think, in your previous delivery, you also mentioned carbon markets. I think I want to ask Awelani this question, coming from a fintech perspective, we can't end this discussion without talking about distributed ledger technology, tokenization, and the role that it can play in this sector, especially, carbon markets, and, some key regulatory considerations that are essential to make sure that there is integrity and consumer protection when it comes to the tokenization of carbon markets. So Awelani, I'm just going to hand over to you so that you can also, share your perspective on this. Thank you.
Thank you very much, Keith. Sure. I think with DLT, it actually have a very significant role to play in this space. As you know, DLT enables the immutable recording of transactions. So this carbon, the name is leaving me. Those carbon credits, carbon credits actually, one can easily record them on a DLT. And this will enable transparency and provide more information regarding the history of the transactions, the origin of the transaction, as well as, probably the more reliable data about the transaction. I think that's what DLT does. And what that does, it actually creates a confidence in the system. And what it also does, it eliminates things like fraud and any form of malice that can happen in the space. So again, DLT and tokenization, what they can do to the carbon market, especially the voluntary carbon market, what they can do is that they can democratize that market, make it more accessible to individual, not only to well-established institutions that want to invest there. Even a normal person who want to participate there can have an opportunity to participate there, have access, and even communities that are, you find that most of them are impacted by these carbon emissions. They can have an opportunity to be able to participate in that market due to what tokenizations and DLT does. So those are kind of opportunities that they are able to provide to people. I think in terms of considerations, when it comes to consumer protections, I can't say it better than what Belinda have said. I think as regulators, we have to look at a way whereby we make sure that this information that is being recorded, it's properly audited. There's some sort of integrity checks that are there to ensure that, because imagine if wrong information are being reported on DLT, we end up communicating wrong message to wrong people, to the broader public, and as a result, consumers become more vulnerable as a result of that. So there is that need to make sure that we come up with ways to make sure that information that is reported there, it's continuously audited, it's validated, so that at the end of the day, what we are communicating out there to the public, it's of greater quality and it's going to help and enable us to achieve what we want to achieve. So I think those are the aspects that I can highlight, Keith.
Right. No, Awelani, thank you so much for sharing those perspectives. I think what I'm picking from this discussion is that there is more that's still to come in this space, Green Fintech. And I think as we draw to a close, it will be interesting to also hear, the panelists' perspectives. I think I'm going to start with Belinda on this and say, I think the question that I'm asking here is, what does the future look like when we consider Green Fintech, the role that technology has to play, and how can technology continue, to contribute in this space? So I'm going to start with you, Belinda. Thank you.
Thanks so much, Keith. I think that's a very valuable question, particularly for us in South Africa and on the African continent, where, for me, climate change is a big thing that's going to be impacting us. And we didn't necessarily put all of the emissions into the atmosphere, but now we will be, having the consequences of it. So here I feel that Green Fintech can really play a role in taking all the data and modeling that data and looking at weather patterns and forecasting droughts and extreme temperatures and helping us to, set the right insurance policies in place. Because I'm not sure how we can say that our companies are going concerns when there might be a huge extreme climate disaster and, that might knock out all the profits. And that also has implications on society. So if people can't get access to water or their home environments are flooded, one extreme to the other, it's going to have an impact on their health. And that health, a lack of water, a disease manifests itself. People don't turn up for work. There's a lack of productivity. There's a lack of economic growth. So as Awelani was speaking about previously, is that there's a great incentive for economic growth as well. So if we can take the data and we can model that data and use machine learning and use satellite imagery to actually plan for these climate changes, we can prevent a lot of trauma and tragedy and loss within our economy and within our societies. So that to me is a key one that stands out. And then, looking to the future, I think what we've got a lot of scope, in terms of renewable energy. So, in South Africa and across Africa, we've got so much potential to generate renewable energy through solar and through, wind farms and through wave technology. So really to capitalize on that and to understand, to set up those renewable energy contracts, set up those wheeling agreements, all using Green Fintech, you know, put those smart contracts in place, use the technology to measure what is required, where it's required, and to go and supply that, you know, those energy sources to people who need it, and start replacing our fossil fuel usage in those respects. So those to me are the two key areas that stand out. Thank you.
Thank you, Belinda, for those insights. I think I'm also going to pose the same question to Grant. You know, what does the future look like from your perspective and your interaction with consumers? How does it look like? How, you know, what are some of the unique factors that are at play when it comes to serving the South African market?
Yeah, Keith, I think that is a massive, long question in many ways. I mean, one could really unpack that for hours. But perhaps the following. Machine learning has been around since the 1950s, IoT since the early 1980s, blockchain arguably since the early 1990s, with Bitcoin really being around since 2008. And these are the technologies we're looking at. They're the technologies that often we talk about as being modern, and they're not. So if we want to try and work out what's the landscape going to look like in sort of 5 or 10 years' time, one really has to try and stretch one's mind. And that's what we try and do. We try and put together a paper and for internal use, only that we try and imagine what the world's going to look like in a decade's time. And by trying to imagine the world in a decade, we probably get closer to getting it right in terms of what does it look like in 5 years' time. So in 5 years' time, if we were to have a few little sort of catchphrase words, whatever, you know, ambient AI, sort of this AI that optimize the efficiency on kind of in an invisible manner, but also in an ongoing manner. So just there's this AI capability that's running deep in your systems, constantly improving and making changes. Edge intelligence. So you know, these devices that are intelligent at the edge without having to go into central databases. Predictive personalization. So where we can essentially help customers make better choices, and kind of in line with this topic, better environmental choices before they even know that they need to. Autonomous finance, for example, being able to route capital in the most efficient or sustainable way. These are the types of things that you know, whether it's exactly that catchphrase, but this is the way the industry is turning. I think, to repeat what's been mentioned already, obviously the local environment it's the same topic, sort of the energy and water, sustainability, and just the local environment that we've got around some of our natural resources. And what's interesting is, because of some of the challenges we faced, innovation has been driven that much faster and harder, with both water and energy becoming more distributed in the way in which we use them, which of course comes with, you know, pros and cons. And then of course the social impact that we're going to have to make sure that any solutions we build have to just take into account the social impacts, and getting this balance between the environmental and social. And I know when I studied engineering years ago, they always spoke about the engineering dilemma. It's either going to cost too much, or it's going to be cutting corners somewhere. So it's a balancing act the whole time, trying to make sure that you literally are delivering the best solution that you can without cutting corners, with the right amount of reporting, you know, not costing too much. It's literally, yeah, it is literally a balancing game. I think if one tries to move 10 years ahead, you know, what does it look like when we don't carry cell phones around? I mean, everyone's talking about a cell phone app, but what happens when there is no such thing as a cell phone app? What does that look like? What does that mean for financial services? What does it mean for allocation of capital? What happens if people don't have jobs or don't need to have jobs? What does that changing world look like? It's a very, very different world. And I think that the only way in which you can really prepare for that as an industry and as a regulator is to try and understand the levers that affect your world as best as possible, and to try and build a tight feedback loop so that you're agile. You're agile to change, and you're able to act quickly as you see new emerging technologies and trends. Yeah, I think trying to not go too long. That's as we see the world.
All right, perfect. Grant, thank you so much for that. I think I'm also going to pose the same question to Kershia, trying to understand from your perspective as well, how does the future look like, taking into account the work that FSCA is doing in this space? If you maybe share your insights on that as well. Thank you.
Thanks very much, Keith. And I think I'm quite optimistic about the direction that the economy seems to be going in terms of the focus on sustainability goals. I think we're hearing much more about it in the South African context these days. A lot of questions about how we can be attracting international capital towards sustainability objectives, the role that our carbon markets can play in terms of offset credits and things of that nature. So I'm hoping that the momentum continues. I'm hoping that the innovation continues, and not just for the industry, but for the likes of ourselves as regulators. We spoke about these manual Excel spreadsheets that are not even a possibility, really, when it comes to the complexity of sustainability and climate reporting. And so we are also having to make sure that we are keeping abreast of technological advances and developments that can assist in our monitoring and oversight function. I think from a regulator, it always comes back to regulation that meets the correct customer outcomes. So making sure customers are protected and making sure markets work efficiently, regardless of the differing technologies that may come in 5 years or 10 years, those outcomes remain the same. And regulation really needs to be principles-based and flexible enough to provide for that. And the last thing I'd want to say is it really is about responsible innovation. So as these innovations come to market, it is about making sure that they're being conceived of and being used responsibly. And I think, again, a key objective for the regulator, we absolutely support innovation, but we're also quite strong on saying that it must be responsible innovation. Thanks, Keith. That would be my view on the way forward.
All right, Kershia, thank you so much for those insights and the views that you've shared. Awelani, also to you, similar question. Will this sector remain a niche, or what will it take to become mainstream? I think it's one of the things that we picked up from the study that is still a niche area. So from your perspective, what is it going to take for it to become a mainstream?
That's a great question.
Awelani, I think we are having sound problems again.
You have lost me again.
Yes, now I can hear you.
Now you can hear me.
Yes.
I wonder what's happening today.
Yeah.
Okay. So for me, Keith, I was indicating that there are actually two things here that are at play that will actually influence how this sector will look like going forward. Number one is around awareness. Consumers should be, we need consumers who are aware of the impact that the fossil fuels are having in their environment, and for them to start demanding products and services that don't just meet their individual needs, but that are also friendly to the environment. Also, when it comes to investors also, we also need investors that are not only going to look at the returns, but also look at investing on projects and initiatives that are going to yield results to them and also positive results to the environment. So if our consumer community can become aware and start demanding more, and also our investor community become aware and demand more, I think we'll see this sector growing massively and having a massive influence in the long run. Secondly, there's an issue of technology also. The technologies that we have highlighted there as a driving factors or as a driving force behind this green fintech. most of them are not yet widely adopted. I think you have also indicated in your presentation that some of them are a bit costly. But I think we need to, until we reach that stage where those technologies can be widely available in a more cheap and affordable way, I think we're going to see a lot of innovations coming from this space, which I think it will drive a huge growth for this sector in the future. So yeah, for me, those are the two factors. If we can get it right on issue of awareness and we get it right in terms of technology, I see a sector that is going to be mainstream instead of a niche in the upcoming years. Thank you very much, Keith.
All right, Awelani, thank you so much for those perspectives. And I think the panel itself, great perspectives that we have shared, and we have received. I think as we draw to a close, I'm just going to ask each panelist, starting with you, Grant, then Belinda, Kershia, and Awelani, to just give your closing remarks as we close this topic that we are talking about. Over to you, Grant.
Okay, thank you very much. I think just starting off, thank you to all your panelists. It's really great to look at a single topic and unpack it from so many perspectives and with different lenses. The financial economy is ultimately the backbone of what drives the entire nation forward, and it's why it's just so important to get it right. If we as the industry and as regulators build product that ultimately unlocks our nation, it's a very exciting thing. And I think that the unique lens or aspect that Green Fintech brings along is that you are able to unlock this nation of ours while ensuring that you've got a future for our children and for future generations. And I think that's what it's ultimately about. The whole reason we care about sustainability is to make sure that we have something that's for more than just ourselves. It's making sure that our children have got a world to live in and a future, and that's pretty cool that we can be part of that.
Thanks, Grant. Belinda, over to you.
Thank you, Keith. So thank you for this panel, and thank you to the FSCA for hosting it. And thank you to the audience for watching it. I've certainly thoroughly enjoyed being a part of it. Just really to echo what Grant said, came top of mind, was that we have got such a unique opportunity today to impact the future generations and make this a world that they want to live in and that they can have resources in order to be able to thrive going forward. I think that is massive, and I think we can only really tap into that through the use of green fintech and technology, because there's a lot of new data that we're going to have to look at and analyze that's not been looked at before, that hasn't been analyzed before, and simply in certain organizations doesn't exist. So this is a unique opportunity. This comes like once in a very long time, that we're able to actually re-engineer the way that we do things, and it's going to change the trajectory of how humanity lives in the long run. So really, I think that this is an exciting opportunity, and I'm really pleased that we're well on our way to capitalizing on it. Thank you.
All right. Thank you, Belinda, for that. Kershia, then Awelani.
Thanks very much. And also echoing the sentiments, it was a really interesting discussion. I think to maybe just pick up on what's been said about this being kind of a chance to look at the opportunity that's there. I'm hoping that there aren't too many people who are still seeing this as optional, this focus on sustainability and climate. This is the second industry engagement I've been involved in just today on this topic. Obviously, the earlier one was not necessarily from a green fintech perspective, but it's just going to show that considerations of how we as individuals, as corporates, as economies are more sustainable in our operations and operate with long-term objectives in mind are becoming more and more mainstream and common. And the quicker that corporates and stakeholders in the value chain recognize this and start preparing themselves for that, the better it will be. I don't think there's any chance that this is a conversation that will die down in a few years, or we'll pick on another buzzword to kind of be focusing on. I think it is about a fundamental shift in how we operate as society, and yeah, the more we work collectively together, the better the outcomes are at the end of the day. So that would be my closing thoughts. Thanks, Keith.
All right, thank you, Kershia. Awelani.
I actually have nothing much to say, Keith, other than just to express my gratitude especially to our panelists, Grant and Belinda, and the regulators who have stayed here for such almost 2 hours. I think it's a testament to the gravity of what is being discussed here, and it's important to our country at large. I think from me, on behalf of our FSCA Fintech department, I can just say, with the insight that has been shared here, I think it gives us a lot of assignments to go back and continue to monitor the space. I think, Keith, this is a challenge for you to continuously go and explore the space more and be very close to it and monitor it as it evolves, so that we always have a first-hand information that we can keep the regulator informed. So thank you very much for this, and yeah, much appreciated.
All right. Thank you so much. And thank you so much to all the panelists that have contributed to this discussion. I'm going to hand over back to Nomthandazo. Nomthandazo, over to you. Thank you.
Thank you, Keith. Thank you to all our panelists. This was indeed a very fruitful conversation. Just before we close, colleagues, we're just going to go to our Q&A session. This is the last Q&A session for the day, and we do have questions that have come in. Keith, we have a question here for you. It says, you mentioned the use of AI in this space. How can the regulator also leverage on the use of technology to achieve its objectives?
Thank you, Nomthandazo, for that question. So I think the mention of AI, I think I can say from the FinTech department is that there is work that FSCA is doing and the PA is also conducting in terms of AI, just to understand its scope in the financial sector. I think from that work and the research work that's being underway, the regulator is then able to understand how they can utilize it to maximize its potential in terms of delivering their mandate. Nomthandazo, you are on mute.
Thank you, Keith.
Yeah.
We have another question as well. What can we now expect from the regulator with respect to the next steps?
I think some of the insights were shared by Kershia in terms of the regulation that's underway. I don't know if I can then just hand over to Kershia, if she can just maybe shed more light in terms of some of the work that's underway with regards to sustainability.
Sure, happy to jump in. So on the sustainable finance front in particular, we are planning on, we've mentioned in the roadmap that we published earlier this year that we're looking to release disclosure guidance for some entities under our jurisdiction, very much aligning to what the Prudential Authority has already issued, and as I've said, linked quite closely to the ISSB standards that were published earlier this year. And then also looking at retail disclosure requirements and what we can do in relation to strengthening those. The last thing is we're considering if there may be requirements to encourage the greater use of the South African Green Finance taxonomy. So that's on the sustainable finance side of things. We should be publishing an update by March next year as well. Thanks.
Thank you, Kershia. Thank you, Keith. I just want to remind our audience to feel free to post their questions on the Q&A tab. Also, should they want to engage further with the FSCA or with the panelists, you can get through to us at fintech@fsca.co.za. Also, the slide, the presentation slide that was shared will also be made available in the FinTech portal that can be found on www.fsca.co.za. In the absence of any further questions, colleagues, we will now close this session. Thank you so much for attending. Thank you to our panelists for making the time to come and have this fruitful discussion with us. I believe it's such conversations that help us to shape and to create a more sustainable and resilient financial sector within the bounds of our country and also the nation as a whole. Thank you so much, Keith. Thank you for having me. I really appreciate this opportunity. Have a lovely afternoon, everyone. Thank you.
Thank you so much to everyone.
Bye-bye.